Today, HiYield's co-founder is joined by PolyTrade's founder and CEO. I'm going to turn it over now to HiYield's Scott Smiley.
Thanks, Jen. Thanks for the intro. It's great to be here with PolyTrade team talking about real-world assets and specifically invoice financing. To intro myself and then turn it over to PolyTrade to do the same. And then I'm looking forward to diving into PolyTrade and how it works and what problem you guys are addressing and explore some potential collaboration opportunities as well. I come from a background in traditional finance, asset-backed security issuance specifically, which is why I actually find the invoice financing component of this talk to be specifically interesting. So started in traditional finance, got into crypto and blockchain in 2017, 2018, worked for Icon for a long time doing strategy, token economics, governance, and pretty much everything you can think of, and found an interest in working at the application layer. HiYield is kind of the next app that leverages my background on traditional finance as well that I'm working on. So interested to hear more from the PolyTrade team. I'll turn it over to you guys real quick.
Thanks, Scott. Hi, guys. My name is Piyush. I'm the founder and CEO of PolyTrade. I think pretty much same story, Scott, as yours. I've spent almost 10 years in traditional finance, has been spearheading the business of requisite capital for almost 10 years doing trade finance. We have seen the problems up close, and we know that these are the things which are the reasons for all sort of monetary losses and scams in the industry. So our idea of creating PolyTrade was very simple, that can we leverage blockchain technology to somehow bring the lending businesses the kind of transparency it needed, and can DeFi open more doors for people to get an access to high generating yields and investment options which they in Web2 cannot access on their own. So PolyTrade is primarily based on two aspects. One is democratization of the whole asset classes, and secondly, to generate that kind of transparency around these assets to avoid any scams or reduce the leakages.
Great. Thanks for the intro there. And I really like what you said, democratizing access to these financial instruments. You feel the same way about that. Can you expand a little bit more about how you're trying to achieve that and what you mean in more detail?
Sure. So Scott, as you would have seen, PolyTrade is successfully running a marketplace today, and we have done almost $5 million plus of volumes so far in last couple of years. I know it's a very deep bear cycle right now, but as a team, we are all confident that we're all common believers of blockchain as a technology. So our efforts are constantly, towards kind of accumulating more RWA assets. And when I say democratizing the access, what I really mean is that today somebody sitting in Uganda would not be able to get an access of high yielding Walmart invoice originating out of Asia, right? And for that matter, this Walmart invoice was never available to an individual in Web2 world. While here in Web3, we can very much bring that invoice in tokenized format on a marketplace like ours, where this is underwritten, it is insured, and people can get access to such high quality asset, not going with the size of the invoice, but can choose what sort of fraction they are interested in, and they can just get their hands on that fraction. So it's a true freedom to a user in getting his hands into multiple RWA assets.
Really makes global financial markets much more borderless and access to kind of global pool of capital from people. It doesn't really matter where you are. If you have a US bank account, it doesn't really matter. And I think adds a lot of value to traditional finance using blockchain. Right. So kind of on that front, just taking a step back, talking about traditional finance a bit more, I think like part of what's important in the real world asset space is to help talk more about these products. I think there's a big educational gap in trade finances, what a financing gap is. We're kind of throwing around a lot of terms. Maybe could you walk through what the process of trade finance is and how it benefits society?
Because trade finance was our background, we definitely intended to start our business with the POC as trade finance. We have successfully done that. And I'm happy to give you a rundown on how trade finance works and what we really mean by trade finance. Let me take a small example. Let's take a small auto components manufacturer based out of Vietnam who sell these motor parts to, let's say, a large OEM, say BMW. Okay. Now, BMW being a large company intends to pay their outstanding invoice in, say, 90 days. Now, this is what we call open account trade, where a large buyer dictates its terms, saying that I would pay you after 90 days. You want to give me the product, you give me, otherwise I'll buy from somebody else. And that monopoly or that kind of dictatorship stays in the industry, unfortunately. Now, being the small manufacturer in Vietnam, that person needs urgent capital, because if he has to wait for 90 days, that means he has to delay all his supplier payments, he has to delay all his salaries, rent, production, everything, right? So only place that person can run to so far thought was a bank. Now, typically, we all know how banks treat SMEs. First of all, underwriting of SME is very difficult because of lack of data, lack of transparency, and multiple reasons. And lastly, lack of collateral, because banks only work on collateral-based mechanisms. And then we come into play. We means traditional investors, traditional trade finance asset managers. When they come into the play, they understand that I have a very valuable asset here, which is the receivable of BMW, which is high quality grade. If I somehow control my risk by taking an insurance on BMW, so that if BMW files for bankruptcy, I'm fully covered. If I'm able to protect myself there, I think this is a beautiful asset class. So I'm happy to fund that invoice and give an early capital to this vendor in Vietnam. Now that's typically in banking terms is referred as receivable financing, factoring, invoice financing. There are multiple names to it, right?
Yeah.
But ideally what we are doing is we are purchasing an outstanding invoice from that Vietnam supplier, which was raised on BMW. We take a credit insurance from Coface, Euler, or some large company, which guarantees that in case of bankruptcy of BMW, the claims will be settled. And by doing this process, not only we got high quality credit note in our hand, the supplier in Vietnam got early access of funds so that he can move his business much faster. And typically, when you move out of the banking space, the yields which are generated in these discounting of invoices is much higher as compared to what banks can charge. And that is the reason this is very sexy space for many players to kind of hang around. And it's not always easy to convince these small shops. It's not easy to convince a large BMW to agree to certain terms. And that's why this business also is a little tricky in its nature. And we have been successfully doing it for last 10 years. So, we thought that let's start our business with the POC of doing this because we understood this business very well in our careers.
Right. Yeah, it makes sense. Like, would you say that one of the main reasons this opportunity exists is because banks in emerging markets don't take invoices as collateral, while in more developed economies, like in the US, for example, an invoice would be recognized to have more value? What are your thoughts there?
The biggest reasons of alternate trade finance existence is that, number one, banks do not do non-recourse finance. Banks only do recourse-based finance, means that if I want to discount your invoice, or I want to discount your LC, or I want to give you working capital loan, term loan, whatever money you want to borrow from me as a bank, I want some collateral. And that collateral can be your property, your plant, your machinery, your car, your house, whatever you want to give. So that if tomorrow your BMW doesn't pay, I don't care. I will sell your asset and recover my money. That's the model banks work, right? And at some point...
Right. So the invoice itself isn't considered collateral.
Yes, precisely. So invoice is a good asset to have, but that's only on the icing on the cake. They want the full cake. They want the house, the property, and everything.
So on that front, like, what do you view as the risks associated with invoice financing? And then maybe more specifically, kind of diving into the risks of PolyTrade as well, to understand a bit more specific how invoice selection is done, what makes a good invoice versus a bad invoice, and the general risks. Anything else you want to add on that front? I'd be interested.
I think precisely the risks of underwriting exists, which are true with any lending business. How strong your underwriting is. And you rightly said, how am I picking these invoices? Is there a particular way for underwriting? Yes, there is. So we do a lot of programmable underwriting where a lot of data is, captured digitally. And these underwritings are not manually biased. Again, one of the big reasons in emerging markets of frauds and scams is that, the decisions are very subjective and biased, which we are trying to avoid totally. Number one. Number two, today in our Web3 space, the whole concept of custody and trust is still largely missing, right? So because if it was a bond or if it was equity, I would have found a custodian who is happy to take it as a custody and fund the invoice financer in case of liquidations and all. However, in illiquid assets like invoices, this is not a very common practice. And I think as PolyTrade, what we are trying to constantly figure out and build are all these solutions around it. And then these solutions would work for any RWA in going future. So today we are talking to multiple, these trustees and custodians and trying to work with them because they do not understand Web3 at all. They do not understand that somebody who owns an NFT would come to my place tomorrow and ask for a settlement. Who are you, right? I mean, they don't have a concept of NFT around them, right? So we are still struggling and we are still trying to find that common ground between Web2 and Web3 of custodian services. We are very close to kind of cracking it. But again, that is one challenge I believe exists today. If any of the investors who puts money into our marketplace and purchases an NFT, who is a digital twin of an invoice, what guarantees do you have that tomorrow the PolyTrade doesn't run away with that money? I'm being very blank point with you, right? You need need a third party custodian who can guarantee that PolyTrade's involvement is done the moment invoice was sourced, right? It is now custodian's responsibility to do the collections on the due date from BMW and settle the NFT holders.
So do you guys work with people that take care of that, like traditionally servicing the debt? Or do you guys
so far, we have been using our fintech arm in Singapore to do that. Again, because scale is not that great right now because all these services come at a very costly pricing. So, with the size, as the size is increasing of our marketplace, we are now constantly active in discussing and negotiating with these players.
Okay, got it. And going back to my previous question, I wanted to hear a little bit more about the good versus bad invoice. Like when you're underwriting an invoice or working with a specific SME, what are the things that you look at to judge higher default risk versus lower default risk? And like, what are the default risks themselves? Like, just for example, I know some default risks I've heard associated with trade finance. Like I do like trade finance quite a bit because it's backed by invoice receivables from AAA rated corporations like Nike or Adidas or what have you, BMW, as you mentioned. But there's a few specific risks associated with the space. One that we've spoken about in the past is an SME shopping around the same invoice to multiple parties, like multiple lenders. And I want to hear a little bit more about that and your thoughts on other of those similar types of risks that are like trade finance.
For sure. Specific. So I think, as an underwriter, as an asset originator, one of the biggest tasks is knowing the risks and then finding solutions to contain these risks, right? For example, the one point you mentioned, us SME, definitely we carry a risk that he takes the same invoice to 6 lenders and get it refinanced by different parties, right? The easiest, and this is the common problem in the industry, but the easiest way to solve it is you go to BMW and you get a notice of assignment signed in your favor. So you know that BMW is not going to pay the same invoice to 6 people. I mean, it's very obvious. BMW will only pay that invoice one time.
Right. Yeah.
So we make sure that BMW acknowledges this, that the invoice is being sold to us.
So you talk to like the payer of the invoice specifically and essentially verify the legitimacy of the invoice and they commit to pay you guys.
Yes. So
does the flow of funds go from BMW to your, let's just say, custodial account or SPV, or does it go to the SME first?
No. The money doesn't go to SME at all. The invoice gets revised and PolyTrade's bank details are being inserted there. So there's no way we are trusting SME again on that. Number one. Number two, I think one of the important features in our underwriting is the history or the track record between the two parties. I mean, we do not touch anything which doesn't have a history of 2 years.
Okay, so the SME's track record working with that specific buyer, it's called, right? BMW in this situation, and trade finance would be a
correct. I will call it, AI can read these documents very easily today, where you can just submit the bank statements of and the ledgers of these parties. And AI can come back and tell you in like literally in seconds that was there abnormality in 6 months back, a payment was delayed or a quality issuance was there or something like that, right? I mean, so these things have become very easy these days, reading the old documents, OCRs and all that. But yeah, that is one of the key underwriting principles for us. And then lastly, I think the insurance availability. If there is no insurance coverage on the buyer, we believe that buyer's credit worthiness is not up to the mark. Because, the buyer never submits his financials to us. The buyer is not a borrower, right? I mean, BMW is not a borrower.
Right.
So just by knowing BMW, I can't be certain that BMW is going to pay my money. I mean, during COVID, we have seen so many bankruptcies of large buyers, right? So I cannot trust that a brand name is definitely going to pay me. So the only way to secure ourselves there is to go to an insurance company and check the insurance availability on that player. Now, that insurance is, of course, protecting me from bankruptcy, but that insurance is also giving me a high-quality credit assessment on that buyer. Yeah, if the rating is low, we do not touch it. If there is no insurance available, we do not touch it.
So is the insurance on bankruptcy specific of the buyer, or is it on not paying for whatever reason? Because another risk that I heard about trade finance, invoice financing, etc., is damaged goods arriving or low-quality parts, like things of that nature, that the buyer is just like, sorry, I'm not paying this invoice. You didn't deliver a quality.
Correct. So just 2 points there. I mean, the supply contract between the buyer and supplier, we read it very carefully and we make sure that there is no possibility of creating a claim of goods after the successful verification done. So most of the buyers, especially in the high quality goods, they appoint SGS or any agencies who will do the verification of the goods at the port of discharge, right? So possibly at the manufacturer's facility or at the port, before loading the ship, the buyer makes sure that the quality is. And once they give us a certificate that yes, this is approved, like I do not have any complaints against the product quality. When they are accepting this invoice with us, they are also acknowledging that they have checked the quality of goods and they are of top order. So again, I'm saying that something can go wrong during the shipment, during the process of transit.
Right. Yeah. That's what I've heard. Right. Like the shipping container gets damaged or some water damage.
So there are insurances which are taken by both buyer and suppliers, which covers those kind of risks for sure. Fortunately, unfortunately, in last 8 years of my history, I've never come across anything like that. But yes, both these parties are covered with transit insurance and shipping insurance and all that. So they also know that their history will be spoiled. If people are doing business for 5 years, 10 years together, I don't see a reason for one shipment to go bad. I mean, intentions of making one shipment go bad. Right. So that is, I think, history is very important between the two parties. The relationship, how nicely the buyer speaks to us, whether the buyer really respects that supplier, right? Sometimes if you're a cocky buyer, you might just turn a request down, and that happens many a times. I mean, we tried working with companies like we tried working with companies like Netflix, and they simply turned us down. They said that we don't talk to lenders. They tell supplier you want to discount your invoices, go ahead, but don't make me talk to your lender.
Yeah, that's kind of surprising to me, because on the invoice financing side, like this, like trade finance specifically, I mean, if it's going to make the supplier more efficient, that could in theory save money for the buyer in the future if they're going to be able to crank out more profits faster. If you're trying to close that financing gap, I'm surprised that a buyer would, if I was a buyer and I was seeing that you guys were lending to some manufacturers, I would introduce you to all of my manufacturers and be like, make my supply chain smooth.
But you won't believe, Scott, many a times we lose the transaction because the buyer asks the supplier, how much are you paying for this discounting? He says, let's say I'm paying 10% per annum. You know what? I'll give me a discount of 8% per annum, and I'll give you the payment right away. So many buyers, many buyers do that so that they can,
little conflict.
They can play up.
They start negotiating.
They can play better with their treasuries, right? So if they're sitting on liquidity, why not earn 8-10% interest on that rather than taking a credit? So again, it's all subject to how much liquidity the buyer has and all that again. But I'm just giving you all
interesting. And that really compresses it. I never
practical scenarios. I mean, we lose a lot of deals because of all these stupid reasons.
Interesting. Yeah, that makes a lot of sense. So going back to PolyTrade product specifically and what users are interacting with. From my understanding, you guys make an NFT out of each individual invoice. Is that right?
So we author
and then bring the invoice.
So PolyTrade is very proud to say that we have created a new standard of tokenization, ERC 6960. 6960 allows an user to truly fractionalize any particular asset they want to buy. So far, if you are selling an invoice, you would make 1 million tokens of it, ERC20, I mean, and then people can buy 300,000 tokens, 200,000 tokens and all that, right? Typical value of tokenizing anything.
Right.
Now, in our case, it's a dual layer token where primary layer is the actual NFT, actual invoice. And the secondary layer is where the user can actually command and say that I want to take away 33.7% of this invoice. The moment he puts a fraction, automatically the invoice gets fractionalized and he can buy only that much stuff. And the remaining asset stays on the marketplace for others to buy.
How big are these invoices typically, per invoice? I was imagining 20, 30, maybe 50 grand per invoice. Is it bigger than that?
Depending, when we are dealing with the smaller liquidity right now, we are dwelling around in that range. Our largest invoice today is around $80,000. But in times when there was a liquidity flow abundant, if we go to some large companies, the invoices values actually go to $500,000 also.
Nice. Asking those questions, kind of thinking about how high yield could work with PolyTrade, putting my traditional finance hat back on for a second, thinking about asset-backed securities and diversifying your risk and lowering your cost of capital by pooling together assets like invoices. So I'm thinking that what high yield offers is, we're aggregating offerings from around the tokenized RWA space into one platform. So you can do one KYC and access deals like, PolyTrade invoices. But on top of that, we can also create custom deal structures where we pool together some PolyTrade invoices, and then maybe even something I'm thinking about is throwing in, U.S. Treasuries in there potentially to kind of lower the risk, but still have higher yield. And then we can offer that product through high yield in, a more diversified package. So PolyTrade comes in and creates NFTs of individual invoices. You guys have the specialty in trade finance. Like you said, years of experience in trade finance, and have given me some great answers on risks associated with this space. So you definitely understand that market. And then we can come in and help package that product into something and try and lower the risk associated with it, ultimately delivering good risk reward profile for investors.
Definitely.
So that's definitely directionally what I'm thinking.
I think, Scott, that's a very good plan because today, my colleagues are there, Milind is there. We have today more than $40 million pipeline sitting with us, right? And that doesn't arise in a day's job. It's a 10 years of working history with our clients that we have this kind of pipeline. So we are very happy to dwell into some partnership like that for sure.
Nice. Yeah, and another component of how we can work together is we're trying to we'll have a lending market for high yield assets specifically. So let's say you buy PolyTrade, like a basket of PolyTrade invoices through us, like you buy $100,000 worth through high yield. We would then lend against that, right? Talking about using over collateralized positions and what banks or non-banks would lend against, on the high yield platform. Assets issued through high yield are usable as collateral to borrow against. So maybe you want to get a leveraged return, you could buy PolyTrade invoices, deposit them as collateral in our lending market, and then borrow maybe another $80,000 against it and go buy more PolyTrade invoices. So that's part of the demand that we're trying to unlock, right? Is allow people to get that leverage return on your
and fortunately, that's a whole wide space. Nobody is doing that right now. On RWS, there is hardly any leverage available, which just doesn't make sense, right? Because the whole concept of RWS
it's a key component.
is exactly the real world assets with the legitimate value attached to them. This is a great plan.
Exactly.
If you can crack that, that's a big market. That will open up big market.
Yeah, definitely. Looking forward to working together on that and looking more into your docs. And I think we got a call scheduled for later this week to look more into it.
I'm looking forward to our call.
All right, folks. Looking forward to the next Twitter space. HiYield is aggregating these tokenization protocols into one interface, real world asset investors to do their due diligence on. So we'll be doing more of these Twitter spaces in the future, working more with PolyTrade, and looking forward to the next one.
Thank you, Scott. Thank you so much. Thank you, everyone. Yeah, bye.
Yeah, see ya.